Good morning, everybody. Welcome to the Flow Show. Here we are, a bit of a quiet morning this morning. Not much going on in markets. Let's see if things spice up in the rest of the day. Morning, Kay. Enjoying the weather?
Hey, good morning. Good morning, right? It's absolutely pouring down, right? But there's always, after 6 months of rain, we will have one day of sunshine. Don't worry.
Yeah, exactly. What's going on here? Z's popping up, saying he's told Putin both sides should reject foreign interference. That's China's Premier Z telling Putin both sides should reject foreign interference. So siding with the Russians once again. That's not going to do any good to the international standing from the West towards China, which we'll touch upon in a moment. Right, what has been going on in China? Data out overnight, not looking too hot. Inflation data, another negative, bigger than expected. So this is now getting into deflationary territory here in China, down 0.8% year on year for CPI, was expected to only fall 0.5%. PPI as well, not falling as much as expected, but still another negative number there. So no let up from the deflationary pressures going on there, and that's going to lead China to keep themselves on the easing side. I wouldn't be surprised if that instigates further cuts along the way. So that's Xi was out yesterday as well. He's popped up a few times now. Obviously, it's we're running into the Chinese holidays, so he's probably coming out with a few comments just to try and prop things up. He says, and this is just an earlier comment, he needs to have a strategic relationship with Russia. He needs to have a close strategic collaboration with Russia. That's part of the comments just this morning. But yesterday he said that he will further comprehensively deepen reforms. This was speaking to state media. Xinhua said China should enhance its positive economic recovery. So doing a lot of talk there. Over to the Bank of Japan, and some comments out from BOJ members. BOJ Shimizu said that accommodative conditions would remain even if negative rates ended. So far, inflation has been driven by cost-pushing factors, and would consider reviewing policy if the price target was within sight. Any policy change depends on the economy and price environment. We also had Ishida saying that certainty for achieving the price target is rising gradually, but it's hard to imagine a path of continuous rate hikes. The economic recovery is expected to continue, and the positive wage inflation cycle is seen as strengthening. He said, regardless of a policy tweak timing, it still sees the need to take steps in communication and market ops to ensure no disruptive moves in financial markets. Need to be careful to avoid a surge in yields. It says the real interest rate is in deep negative territory, and monetary conditions are still very accommodative. We don't expect this to change in a big way, and the BOJ will not abruptly stop bond purchases. Now, as you can see from dollar yen at the moment, typically, I've just put in the chat, I've just had a little short at 79. I said that's guaranteed this 80 level to break, and here we are trading at 99, 98, 99. These comments have been taken, as market often do, pretty dovishly. In my mind, it's not dovish, it's just keeping expectations well grounded, letting the market know that when they do start to end negative rates and easy policy, it's not going to be jumping into 25 pip hikes every month. They're going to take it slow and steady. They see the conditions getting there towards being able to finally pull the trigger, but long way to go yet. All the ducks need to line up. Caution is needed. What do you make it out of that one, Kay?
Well, I think it's as you say, but then this market loves to act surprised. But it does like keep the yen traders who are always putting hope in the Bank of Japan to send the yen a lot higher on their toes, and it's once again sending the people back to reality, and it's this market is really suffering from global Alzheimer's still, and they always forget, and then they start to buy yen again when they see the dollar come off a little bit. Oh, let's buy yen. When yesterday also dollar yen dropped like 40 quick points on this New York bank thing as well. People just love to sell dollars and hope to be able to buy yen for a big move, and then they wake up and it's all undone. And I reckon it's going to be just continuing until the next Bank of Japan. We knew and we know that um, actually it's all been written from day one, and I just can't let go of this line that when Ueda took the helm, saying, and him and the government said at the same time, the same day, we are going to closely cooperate, whatever. That to me, that already then told me enough, really. And we also have to remember that you're in Japan. You're not trading with a government governing council like the ECB, where they all can just hawks and doves. The Bank of Japan, albeit still working with candidates to come on, the candidates are most of the time chosen for a certain purpose, and the purpose is to get out of negative interest rates with Ueda. He's there to normalize, but then he's got one or I mean, so to speak, one and a half hawk on his board, and but the other 6 or 7 are all people who want to just continue and go slow. They've been they've been traumatized with everything that happened over the past 20-25 years, in 25 now, even more than 25 years now in Japan. And yeah, you will have most of those members in the Bank of Japan are going to be extremely careful. And but again, things can change. But today is again a bit of a wake-up call for those who love to buy yen in the hope that there's going to be something really big happen. It's a bit of a wake-up call again.
Yeah, absolutely. And sometimes the market needs a little tap on the head now and again. But let's see what the price does anyway. Let's see what this move can get through 149, and if it continues higher. Right, moving on. The US is apparently set to overtake China as Germany's top trade partner, according to the German Chamber of Commerce and Industry, DIHK. German exports and imports to China totaled around 253 billion euros in 2023. The US was close behind at 252.3 billion euros. The Chamber saying that at the moment there are no signs of a significant increase in demand for products made in Germany from China. Again, this is all part of the deleveraging, decoupling, whatever you want to call it, by the West from reliance on China. Good news, obviously, for the US. That trade is increasing, that they're picking up the pieces from what Germany is dropping from China. So again, it's another feather in the cap for US growth. On that front, the US trade balance came in yesterday. Deficit grew a tiny bit, relative terms, a tiny bit, 62.2 billion. It's a little bit worse than expected, and a bigger deficit than last month. Exports, though, still plus numbers. Exports were up 1.5%, imports up 1.3%. As we've seen from trade balances, particularly in Europe, they're all negative numbers. So the US is still posting positive numbers for that. US consumer credit data was out last night as well. Consumer credit posting 1.56 billion, was expected 14, nearly 15 billion in that. Remember, that was a huge 23.5 billion jump in consumer credit in November. This smells like similar to what we've seen in other economies where the consumer had a little bit of a splurge in November. All those sales, Thanksgiving, holidays, all that sort of stuff, and it's dropped out of bed in December. As I said, similar themes seen in the retail sales numbers around the world, also in borrowing numbers elsewhere, like the BOE consumer credit data as well. So maybe the US consumer might start tightening its belt coming into the new year. We'll see if that's reflected in retail sales as we enter the new year, which we'll get. Yes, mate.
Yeah, no, I was just saying yes, absolutely.
Okay.
No, the consumer is going to be probably together with the jobs market going to be the main thing to monitor in this at the start of the new year, after those reports that we had, better reports in the States globally. Those things are going to be have to be monitored closely, I reckon.
Yeah, of course. Just quickly, Bran, you need to, if you're going to be watching for stuff like this, you need to be on the ball, mate. The Tucker Carlson interview is tonight, 1800 Eastern time in the US. We've been all over that in the chat room. A lot of hoo-ha around it. So make sure you get your dates and numbers known when you start up in the morning. Get yourself planning. Know when the big events are. You don't want to be caught on the hop. You shouldn't be caught on the hop. You've been doing this a few years now, mate. So I'm going to keep my eye on you. You know, I like to be school teacher. So yeah, know your timings, mate. That's tonight for you guys. And what time's that for us, Kay? Is that about 11 o'clock at night?
Yeah,
10 o'clock,
around there, 6 p.m. Eastern time, if I saw that correctly.
Yeah.
At a fiver, and that's 11.
Yeah, I hope there's no football on.
I don't even know if I'm going to be up for it. You know, I mean, it's a lot of noise. I know there's some people may even try to trade it, but I'll see tomorrow morning what the damage is, if any.
Yeah, I'll have a think, see if I want to have a butcher's at it. Might watch it in bed. Right, Fed heads. Fed's Kugler, this is a new bod, was put in place in September. She was out with some comments, first comment saying, well, pretty much borrowing the hymn sheet off the rest of the Fed heads. I hope they've laminated the sheet, otherwise the way it gets passed around, it's all going to rip and tear. So maybe appropriate to cut rates at some point. Same old. Fed's job on inflation is not done yet. Same old. Expects consumer spending to grow more slowly this year. It should help with disinflation. Watching commercial real estate as a source of potential financial stress. Then she passed it on to Fed's Collins, who said it's likely to be appropriate to ease later this year, but we need more evidence to consider rate cuts. Fed's Barkin said it makes sense to be patient on rate cuts. On the jobs market, said there's still a lot of people looking for workers. So indications that the jobs market will remain tight. The Bank of Canada was out with their minutes. They said they were particularly concerned about persistent inflation and lowering rates prematurely. But the Governing Council recognised it was difficult to foresee when it would become appropriate to begin cutting rates. So that's sounding undovish. But then they threw in a dovish comment saying that they discussed the risk that monetary policy could have a greater than expected impact on consumer spending, requiring lower rates earlier and more quickly. So, you know, one of the components they'll be looking at regarding when they move into rate cuts. So watching borrowing numbers, consumer borrowing numbers and retail sales over there important as well. Over to the banking stuff that's still hot on the news. The New York Community Bank was halted for volatility yesterday. Still falling share price over there. But they are in talks to offload some of their mortgage risk, and they plan to sell RV loans as well. So looks like a bit of clearing of the decks over there. I'm sure the usual vultures are circling to get a cheap deal. All the bigger banks, like they came hoovering up all the bits and bobs when SVB went pop. Tesla apparently have asked which jobs are critical, which obviously points to the fact that they're looking to cut jobs. So I don't know who they asked that, but if you're in a job and you get asked if your job is critical, you're not going to say no, are you? So I'm not sure how they're going to get an answer to that one. But anyway, it points to yet more job losses coming on the tech EV side of things. The Hamas ceasefire proposal was dismissed, rejected by Israel yesterday. So we're back to square one on that one, on the geopolitical front. So no end in that. Unfortunately, sorry, Ali, if that tips your gold trade out, that's geopolitics for you. Hopefully we get a solution for what it's worth to people's lives over there, and secondary to that, what it may mean for trading. But for now, square one, the war goes on over there. Okay, bit of a boring day. You got any little tidbits for us?
Very little, huh? Bit of a contrarian couple of articles out on the UK, seeming that the starting salaries pace of growth is softening, weakest in 3 years. That is one anti-inflation, perhaps, thing, and then. But on the other hand, it seems that the UK estate agents have registered the first rise in house buyer demand in as many years, well, in 2 years or so, and that then is a bit of a positive. But really, on the real news front, no, I haven't really seen much. Of course, geopolitics are still bubbling, but then the market. It seems the market is already waiting for tomorrow. Tomorrow, there's a lot of hope or a lot of expectations being built on those 2023 CPI revisions. I think Waller was it, right? Who sent us to explicitly to tomorrow, actually saying that he may base his approach to monetary policy on the back of these CPI revisions, for one, and then we have the fresh CPI coming out next week. And when I look at market moves, apart from the one and the other currency, like for instance, yen on the back of those BOJ folks, but and Swiss doing a bit of its thing as well. There seems to be it's very quiet in the majors, right? Yeah, we went up to levels, and the techs seem to just contain things. Equity markets are preventing the dollar from shooting higher because the correlation algos, when the equity markets go up, less dollar demand, whatever, because it's gone in there. But for the rest, we are still waiting for what's next, and today is one of one of such days as well. We have the claims, but do we really have those claims really been moving stuff more than a few points? Not really. If you trade emerging markets, though, perhaps the Mexican CPI is going to be the interesting one today, because we do have Banxico tonight. And besides, now, as I've been saying since the Iowa victory by Trump, besides what the Banxico can say, we also have to remember that Mexican peso going forward this year is going to be a very political currency, as we've already seen in the knee-jerk reactions to some of those election results, declarations by GOP and everything. So that's one to look out for today, I think, upcoming. and it may be really. It may be the event, really the event of the day, no?
Yeah, what are you expecting much from them? They've seen. I mean, they're all
Well, I
about
mean, the thing
we
is,
might cut in the first quarter, but then they turned a little bit
yeah,
more undovish.
yeah, exactly. They've turned undovish. There was on the prior meeting the risk that they would say that, okay, we are. They sort of said they are where they want, right? But so that the hikes are gone, like for the rest of all of them, and we are relatively in their zone for the CPI, just slightly above, but we are definitely moving towards their CPI zone. If you widen out perhaps a little bit, the max, you look before. Go on the max view. Oh yeah, that's perhaps not the right one. But as you can see, if you go, we are back around those 2019 sort of levels. Like not really there, but not far, right? So I guess it's. I think that sooner or later they will start to cut just a little bit because the rest of LATAM is cutting. But then they, of course, they look more at the US because of the nearshoring and all of that. And since the US is not moving yet, they may be tempted to keep everything still right now, in which case, and if we don't get a weaker CPI before that in about an hour's time, the Mexican peso could enjoy a little bit more strength, I reckon, if they just keep the currency where it is, and then we are back to trading politics once that move is done.
Yeah, very much so. Inflation definitely. Well, it's tracking up a bit, which is never a good sign. That's the fear for all central banks, that it's come down significantly, but perhaps it's not quite ready to come all the way back down to targets again. So, yeah, these numbers, as I've shown you there, expected out CPI, they're expected to rise a little bit more again, there to 4.88%. So keep an eye on that one. Also keep an eye on their core numbers as well.
Yeah, and the last
Yep.
little tidbit, if you allow me to, is yesterday's Treasury Department, Yellen, brought out their IRS release analysis showing the high return of Inflation Reduction Act investment. So they're expecting a lot of receivables, as she already been hinting at, and that already showed somewhere in their next quarter plans for funding. So it seems everything is quite rosy over there. They are very happy about everything. Now we have to see, but that's something for the more medium term, whether those receivables really come into the coffers and they can borrow less in the quarter to come. So that report came out last night as well, and really, apart from that, very little market move.
Yeah, thank you, mate. Right, before we get stuck into the prices, just want to give you a bit of just a little public service announcement. There's been some news from yesterday regarding a couple of prop trading firms that have had their services pulled by providers. I'll put a link to a headline in there because I know a lot of you guys look at prop accounts, and obviously we have a lot of you guys in our trader funding program, so we just want to make sure you're all aware of what's going on. No problem with ours, but there's a lot of it's a growing business, okay, and there's a lot of like everything, there can be a lot of unsavory characters out there. I'm not making any accusations of these firms. I'm just bringing you the news that a couple have had their services pulled for one of them suspected fraudulent behaviour, over inflating payout news that they give out. If you are looking at prop firms, you need to make sure, whether it's ours or whoever's, you need to make sure that you look into this properly, okay? Although it's fairly low risk because you're usually only just paying out, well, for our program, you're only paying out the assessment fee. So your risk is always only the assessment fee, okay? So if you take a a 50k account, it costs you $500. Okay, if you turn that into 100,000, obviously you probably would have been pulling money out anyway, so you've paid back your money. But even if you build up to 100,000 and lost it, the most you'd lose actually would be the $500. Okay, so it's a low risk thing, but don't be swayed by the gimmicks. I know there's a lot of gimmicks being thrown out there for these firms. A lot of these firms rely on turnover. Okay, they make their money not through successful traders. They make their money through turnover of failed traders. So if you're a firm and you're turning over, 500 accounts a week at $250, I'll let you do the maths. You can see how much they earn and things like that. We're not like that with the TFP. Okay, we want to make money on you making money. So if you're successful, that's how we make money here. So I just want you to be careful when you look at these firms, as I say, whether it's us or anyone else. Be very careful, do your homework, make sure you're not going to get caught out, by flashy gimmicks and promises that maybe can't be kept. If you join a TFP, you'll get the support of us here, get free access to our trading room, to our platform. So we make sure that we give you the best conditions possible to help you succeed. I'll put the link in the chat room. There, you can see it in the Zoom chat. What link did you want, Chris? The news link, have you just jumped in? I can post that again if you want. But as I say, there's our link to the TFP as well, if you want to check it out. We have been market leading in one thing, and that was offering no time limit to passing. And a lot of prop firms have now cottoned on to that, and they've all tried to change it as well. So, just be careful. It's a growing industry. It's very touchy on the regulations as well. Just make sure you're safe and covered with that. Right, let's get stuck into what's going on in markets. Not a bloody awful lot. Oh, look, there we go. I've just been stopped to my dollar yen. Typical. See, this is markets for you. You get complacent about a level, and then when you decide to trade it, it blows up in your face. So I had a little short. I've had a couple of shorts, 79, 97, stop at 149.10, and that's gone. Luckily, it wasn't a big trade, but we're finally seeing a break up through 149. This looks a bit yen-led, okay. So still maybe a bit of falling out from last night, perhaps.
Yeah. Do you have the? Yeah, it's definitely yen-led by those guys. And as you already said in the room as well, and which is a bit logic, it's been capped at 148.80s for 4 or 5 times, and you get through. People are buying. Have you got to that 78.6 of the move down from 152? Because that comes in, and that's my next point at 149.40. That to me is will be the gateway to if you.
No, I don't know. I don't know if those. I have my
You've got lines in there every 5.5 pips.
That's the daily chart. You're talking about the fib from the top, yeah?
Yeah,
down
from
to
the
there.
top to the correction. That's 149.40 roughly.
Yeah, I'll scrap mine. I'll scrap my fibs when they get broken up.
Is that's going to I think the gateway to 150. Will we see 150? Well, who knows? What's happening. And I think if not today, tomorrow on those CPI revisions in the US, if they come out just a tick or two better than or higher, I would say, not expressing myself as better or worse, but worse would be higher. But if they come out a couple of ticks higher, that's probably going to be the trigger to for some renewed dollar buying, perhaps a euro dollar retesting the 107.25 and dollar yen 150. Yeah, it's yen led. Perhaps a little bit Swiss-led as well, because if you look at those Swiss crosses, they are still bid. But has to be said that FX, apart from those individual currency moves, is very much a spectator of what's happening right now in the equity markets for sure, because the correlation is not always obvious. And just a follower of fashion, what's happening in the yield market, it still doesn't seem to me that there's a lot of at least very big real money at work. I can see in a couple of currencies, and I suspect, for instance, in something like Swiss, that there's just people sitting on the pit, not really going violently to market. Yeah, Euro Swiss is higher, dollar Swiss is higher, and Swiss crosses are higher, but it's not like your move where you go like, all right, now we need to get all aboard and just whack the currency, right? Not even in yen, because yen, okay, we're higher, but it's volatility in yen as well has always been higher for 2 years now, right? Than in other currencies. So it's still that, because if you look at the rest, cable has made its move back, and very sterling very stable right now. Euro dollar extremely stable. Aussie dollar, yeah, capped at 65, 25, 40, but stable as well. Kiwi roughly the same. So FX is a follower of fashion right now, as I please to call it. It's not really the driver of markets.
Yeah, yeah, very much. I mean, the vols are coming down still. I mean, even dollar yen vol this morning 8.13%. That's been slowly creeping down. Won't be surprised to see it under 7% at some point. Sorry, under 8% at some point. Euro dollar 6.3, cable 6.6. So still, those sixes means it's quieter. I think we had one of the tightest ranges, daily ranges for a long time in cable. What was it 35, 45 pips or something? You know, that was very quiet yesterday. But yeah, there are still technical pictures playing out. You know, Aussie, yeah, it's had a bounce, but it can't get above the zone, so it's keeping the weakness within it. So it keeps this downside in play down here. So 65, the figure's holding at the moment. Then we get to see if this level down here, 85s, holds again, and then down this low at the bottom here. Euro can't seem to move out the 70s at the moment. But again, got up near 108, failed. Couldn't even put in a proper test of 108 before failing. But, it's looking maybe a bit more bottomy, let's call it that, than others. But if we get a test down here, need to see if it's going to break it. We've had all through the year. We've made lows, we broke the lows, made lows, broke the lows. If we have another test down here and it holds either the low or just above the low, say 40s, something like that, that would start to indicate that maybe we finally looking to break this trend, short-term trend that we've had this year. So it's all about the price action going on a retest of those lows. But certainly without no big drivers, the market's well positioned FX-wise for central banks now until the next comment, meeting or piece of data says otherwise. Euro sterling matched the low yesterday. This was a bit of a fixed move yesterday, wasn't it? Again, I was looking to see if we maybe get a move down close to the figure, but no, and off we go again. So patience is needed for this one. We said we could be here 2 weeks time still talking about whether this is going to break 85.20 or 85.70, but for now it's still holding these lows, and while it's doing that, it's stopping again the drop that we've seen so far this year. So that's a similar sort of picture you want to see in euro dollar, if or any other pair that wants to bottom out. You need the evidence stacking up as to why it's not going down anymore. Yeah, there was a bit of flow yesterday, Kate. Just minor flow while it was quiet on the fix yesterday.
In what's sorry, Ryan, I was just
yesterday's London fix when we saw euro getting a little bit of a knock on the head.
Yeah, some euro crosses were hit a little bit. Yeah, a bit of euro selling, but then throughout the day we do see a kind of different picture. Well, today it's not moving. I mean, apart from the euro yen, but that's a yen thing. But today the euro crosses are relatively stable. We did see some demand though in euro against the antipodians. Antipodians, I think, are perhaps looking a little bit towards China again, but it's opportunistic correlations. Yeah, what's happening on those fixing side, I don't really have a clear view on it. It is just what people need to do at times, flows. There's so many flows going through a market that we don't have a view of, and coming out of just commercial necessity, right?
Yeah.
Um,
Maybe just magnified because there was nothing going on yesterday. So
exactly,
even the smaller flows look like they have
exactly,
an impact. So
exactly.
that's something to keep an eye on. If we have got tight ranges, quiet markets,
Mm,
if you see a move around the
mm,
fix, there's maybe a bit more inclination to try a fade if it's hitting those levels, like in euro sterling down in those lows.
mm.
Ratios looking
Nice
at
one.
picked up a nice trade there, mate. Where you want it to go up 160, 150, 162. It's possible. Keep an eye on what's happening with dollar yen. Yen's moving on its own. Okay, so we're not getting any input from yields really, US yields in particular. They are still holding around this 410 area, but they're not shooting up. Leading to a reason why dollar yen should shoot up as well. So this is all about the yen. Can it go up there? 161 and a half, 162, of course. I'm sure Kay's got some better technical levels in there, but obviously 161 getting into there. We've got previous history recently, so that's going to be your main level to watch there. Break above there, and maybe we do have a look at these highs previous. Make sure you know the rules. Make sure you at least look to try and take some profits on this move if you've got some margin in it. Time and time again, we've seen these sort of things just wash out 5 minutes later, and then we're all the way back down again. So protect your profits, protect what you got, so you don't get caught out if you do hit a reversal. Kate, anything you want to show us that we don't already know?
Yeah, I know, mate. Yeah, you know what? I'll show a couple of things, and I'll come back on that euro yen. But then Horatio said, "Never mind, he took profits."
Okay,
Anyway, nice trade, mate.
good. Yeah,
It's a
good trade,
good
mate.
it was a good trade. I just wanted to show it because I am keeping an eye on it, and I think whatever happens, the important level is for the more medium term is going to be between 161 and a quarter and 162. Okay, but yes, we did see a little bit of a break back above this 159.80, and then the prior tops we had potentially double top there end of Jan, starting of Feb. That's now through this 160. 2030. And I was going to say, but it's too late. If you're long from a decent level, and perhaps you can start to put up your stop also and hide it just under that level. But okay, that one is done. The definitely, Gavin, 161.90 is a big level up there. Yeah. I think for the dollar yen, and I'll show it because the Ryan's chart was anything but visible. 78.6 of the move down from 152 to 140 at the year end is at 149.40, 42. So that is likely to be the gateway back up to 150. If you look at it pure from a tech view and from what's happened price action view, there's this top here as well around 149.70. I recall that we were monitoring that because it really banged its head around there, and I was like suspicious of some possible Japanese exporter activity up there. Of course, I'm a retail trader now. I can't have all those confirmations. People in banks, if they would talk to me and give me some of that information, they're risking their job, so they don't do that anymore. But there is still indications that up to 150 they may have left some orders. Now I think they are not going to be non-stop there, even though they have quite a bit to do, but they already done a fair bit here, I reckon. around those 148.80s, and they were the reason that it capped all the time up there, apart from some dollar yield moves. So to me, yeah, this run here, it for sure can go back to this higher here, and it's yen. It's taken the direction. It's likely helped as well by some cross trading as well. If you look at sterling yen, for instance, is already back above 188, where we were turning around 186. No, this is not the correct one. Where we were turning around at 186 and a half zone, which, by the way, the second level held. I was monitoring this, and I said, like, whoa, close below, maybe we can go a bit lower, and look at what happened. It completely rejected, and we're already back through a little bit similar as in the euro yen. This 187.60 is probably your euro yen around 159.80. This is always obviously a speedier one as well, because of the sterling moves. It's already back up there. So counter trading it, I find it a bit dangerous. Once more, pop, pop, pop. Yeah, I said today we need to look at the mix, because we do have not only CPI, but we have the Banxico. Okay, so dollar mix. We are still overall, if you look at it from what's happened in the tops here, we're still in a move lower. Go longer, it's even more obvious, right? Stepping stone lower right now. But in the shorter term, and that is what the people are watching now, we are holding above the 61.8 of this retracement move, okay? And you can see this, I think this is the Iowa result, if I recall correctly. This was the Banxico saying that they would halve their FX program, right? But this is the Trump Iowa result. This is the week after the thing. The week after, I don't recall which state anymore, but that's the week after. So besides whatever Banxico may do, this is going to be a very political currency going forward, as I say. So I would say that if CPI is a bit stubborn, if the Banxico doesn't do anything today, there is a possibility that the market has to go for it, and we get back to those 1680s here. If you look at a very no, this is not what I wanted to look. It is possible to me if they are stubborn. If they start to hint at well, basically cutting rates soon, which I think is on the cards. Like all the central banks, they will be cutting rates soon. You can hardly stay at 12.25%, although most of the investments over there are done likely in dollars. But this is still a very much carry trade as well, with the high interest rates, right? The one that I'm looking at and is also Euromix, and that's trading around support. We tried to get back a bit lower. I guess we're not far from similar supports there as we saw in 78.6 already, because of the euro move of late, right? But I think if we get a stubborn Banxico, I think we're in for a retest of 18. That to me is going to be an important level, because you see this line here, this little one here, and if you go up to the weekly, that's a 78.6 of a 10-year move, right below 18, okay? Just below 18. And that to me is going to be your magic number. If we get down there to 18 again, we've bounced off it once. Keep an eye on what's happening. It's a weekly, right? So I mean, this is not something that you trade 10 minutes positions on, right? So you have to bear in mind the time frames of everything. Okay, so that for the mix, and for the rest, Yeah, Swiss is muddling on. We oh yeah, Ali, you were asking around about the 94.10. You know what? I'm not going to tell you what to do, but this to me is looking a little bit more constructive. Okay. Um, I know you want to do it like more longer term, but then I don't like your ratio at all. Um, if you want to put a stop at 95.5 and a take profit at 93.30, that's not really your ratio you want to use. I'd say really if we get over 94.40 already in the shorter term, this could continue to push 94.20, 94.40 every 15, 20 points. It's Euro Swiss. You're gonna find levels there, okay? But and especially if it gets above 94.70, then I reckon we will be back at 95.5 relatively soon after. The one that I'm really interested in is, well, I got a few sterling Swiss as well. I got a bit of stuff at times. Is this dollar Swiss? Yeah, still 94, sorry, 87, 87, 20, 22. And then this one, this high, 28, 2030, 87, 2030 dollar Swiss. That needs to start to hold for a push higher. Okay, and that's it for me for today. Right, back over to you, man.
Thank you very much, mate. Andrew was just saying earlier about Canada, there's almost a 1% unemployment increase, possibly due to population growth. Is that something that you're seeing for tomorrow? Because we get the jobs data tomorrow from Canada, which we can obviously have a chat about tomorrow, Angela. Just let us know your thoughts on that, or if you want, save them for tomorrow. It'd be interesting to hear about that, what you're seeing or hearing about that one. As for the rest, have a good day, I think. It's all I can say for that. Watch the old S&P. Still hasn't cracked 5,000 despite what you may have seen across the socials yesterday. Everyone was jumping on the March break of 5,000, the March futures break of 5,000. But cash got to 499.89 yesterday. So no 5K hats coming out just yet. So that's maybe something to keep an eye on today. Bit of popcorn watching if you're not trading it. On that note, have a great day, everybody. Thank you, Kay, as usual, for all your hard work. Angela, you hit on ING. Okay, I'll see if I can have a look at that one. Dig it out for tomorrow. Thanks, everyone. See you tomorrow. Hope you have a good day.
Thanks, Ryan. Cheers, everybody.